All right, everybody, welcome to Nighthawk Investing. This is Bronson. I'm Investor Relations here. I'm here with Michael Blanc, the CEO of Nighthawk Equity, as well as Drew Niffen, the president of Nighthawk Equity. So excited to have you both here today. Today, we're going to talk about why people invest in multifamily. So our first question is, people know the stock market is risky, and this is for Michael. So people know the stock market is risky. How does multifamily investing compare with stocks?
You know, one of the things I love about multifamily, Brenton, is how it performed in the last recession. So, for example, of all the government-backed loans in the recession, 4% of all residential houses were in foreclosure. That's a lot. That's a huge foreclosure rate versus multifamily, 0.4% was in default. And that's including, of course, California and Florida, who were the hardest hit. And if you study why those people actually lost these buildings, it was because they didn't buy for cash flow, and they were hoping that it would just simply go up in value. So they got these 3-year interest-only ARMs. So when the recession happened, they didn't have the cash flow to ride it out. They didn't have the financing to ride it out, so they were forced to sell or refinance, and they couldn't ride it out. And so, you know, we don't do that. We have long-term financing in place. We always buy from cash flow for day one. So if for something were to happen, we can just ride it out. There was a story, we were having a 500-plus unit in El Paso under contract, and we had a chance to hang out with one of the sellers. He's like 85 years old. His name is, let's call him Bill. And he was talking about, and I said, Bill, how was the recession for you? And he went on and on about his stock market and his short positions and his hedges for like 10 minutes. He was very excited about it. I said, Bill, fascinating, but he had like 10,000 units at the time. But how did your apartment buildings fare? He goes, oh, but they were fine. You know, it was like a non-event for him. So I just love the way that these apartment buildings, how they perform in a recession. So the risk profile compared to any other asset class, including real estate, residential, office got hit really hard, retail got hit really hard, is one of the most recession-proof asset classes out there.
Awesome. Thank you. Drew, can you talk a little bit about returns, kind of how returns some people consider them above average? Would you maybe just talk about what we see in multifamily compared to other asset classes?
Yeah, sure. Yeah. So the returns on real estate, you know, have been excellent. And it's one of the reasons that I personally have pivoted from the stock market into real estate with all my, personal investing dollars. And as I research this more, just the data comes out that's true. So, for instance, Bronson, in the last 18 years, housing has generated much higher and much higher quality returns than the stock market and much higher just overall numbers. It actually outperformed the S&P 500 2-to-1 since the turn of the century. And that doesn't even take into account the risk profile. So, right, we talk about this maybe later, but the volatility of stocks is so much greater than real estate. So from a total return, the number is higher, and from a risk profile, the risk is lower. On top of that, the cash flow from multifamily is much better than what you get from conventional stock-like investments. So the returns are much higher on a numbers basis and on a risk basis.
Awesome. Thanks so much, Drew. Appreciate that. And in line with that, Michael, can you touch on some of the tax benefits of investing in multifamily, particularly multifamily syndication?
Well, this is another thing I love about this whole multifamily is the risk profile, how they performed. The returns are actually above average. The volatility is much less. But the tax benefits are crazy. Like, this is crazy. So because you have this magical thing called depreciation, it's basically an expense that reduces your taxable income on any real estate owned, but it's magnified with commercial real estate or multifamily specifically. So just without getting into weeds, and I think we should do a different video on just the tax benefits alone, but let's say you invest $100,000 and there's a $10,000 distribution, so 10% cash on cash return, which is great. So you as the investor is putting in $10,000 in your pocket. At the end of the year, we issue what's called a K-1. It's a tax statement that you give to your CPA. And on that K-1, instead of showing a taxable gain of $10,000, you're likely to show a taxable loss of like 20 grand. So as far as the IRS is concerned, you lost money on that investment. How can this possibly be? It's because of this depreciation. So when President Trump got elected, he introduced this thing called bonus depreciation, which is really handy because you can depreciate or count as an expense almost the entire value of the building in year one. So all the investors are showing this massive loss that then of course offsets your gain. And if you don't use it all, which you don't, you can then carry it forward to the next year and the next year and the next year. And it could even possibly offset the capital gain at the end when we sell. So normally when you have a stock, for example, and you sell for capital gain, let's say in 5 years, well, you pay your capital gains tax, 20% or whatever the case may be at the time. But with multifamily, your tax is nowhere near 20%. It's like, I don't know, it depends on your tax situation, but it could be darn close to zero. And that is incredible. There used to be a short time when oil was slightly better, and now it no longer is because of this very fact thing. So when people are comparing, oh, I'm getting a 10% return in my stock portfolio, well, and they're comparing that to a 10% return on a multifamily syndication, they're not created equal, because on the stock, you still got to pay taxes. And on the multifamily, the taxes you pay are substantially less.
Yeah, and let me just add something to that too, because we're recording this on April 15th, right? And today's tax day. And because of the power of depreciation, with Michael just mentioning, my taxes are, without getting specific, I mean, they're less than 25% of what they were 3 years ago. And so, we've been buying great properties. They've been cash flowing, putting cash in our pockets. And at the same time, the tax forms that we're getting are offsetting and lowering our taxes from our other income streams. So it is a very, very powerful tax benefits to real estate.
Gentlemen, thanks so much for sharing. We're going to have some more time and more videos to talk. Just wanted to let all of you know, a lot of people don't know that Nighthawk Equity is actually the passive investing arm of the Michael Blanc. So if you're interested in getting involved, there's some opportunity at nighthawkequity.com. You can join the Nighthawk investment club, which is basically we can kind of set up a time to get to know you and basically find out what your goals are and see if it'd be good to partner together. So thanks so much for taking the time. We'll see you in the next video.